Hi everyone, welcome back. We are working through the 4 required financial statements. Hopefully you've already watched the video on the income statement. Now we're moving on to the next statement, which is called the statement of stockholder equity. I will tell you this is one that is probably most confusing for students just because we're not as familiar with stockholder equity. So remember back to your accounting equation, you've got assets equal liabilities plus stockholder equity. And we said, what the heck is stockholder equity? This is the owner's claim on the company's resources. So those claims can come from one of two places. Either it's money that they've paid in for shares of stock, or if it was a sole proprietorship, money that you've paid in as an owner to get your business going. So stockholder equity could be made up of stock or owner equity. It's what you've paid into the company as an owner to become an owner of that company. The other part of the owner's claim on the company's resources could be from earnings of the company. So we also have this other component of stockholder equity called retained earnings. So retained earnings, that's all the earnings that the company's made over its entire lifetime that they've kept within the company. So we're going to do this statement of stockholder equity, and it's not, oh, it's fabulous. It's just a fabulous statement. Okay, here we go. Sorry. Our starting point for a statement of stockholder equity is how much was stockholder equity at the beginning of the time period. Then the statement is going to show what happened throughout the time period to stockholder equity. And then your last thing is going to be, well, what's the ending balance for stockholder equity? So it's not a very exciting statement, I'm sorry to say. So you start with, well, how much did I start out with? And then what happened to it throughout the year or month or whatever time period you're reporting for. And then here's the ending balance. So again, we are doing a required financial statement that we're going to give to people outside of our company. You need to document your statements all the time with these 3 things up at the top. First thing is the name of the company. Second line is going to be the statement that you're preparing, a statement of stockholder equity. The third line is the time period. So we're back to Eagle Soccer Academy, and this is their statement of stockholder equity for the month of December, but they do the wording like this: for the month ended December 31st, 2021. So this is very common language, for the month ended. So it's saying for the month of December. Okay, beginning balances. Most of the time when you're working through a statement of stockholder equity, oh, sorry, it's got all the balances in there. So just look at this first line. Most of the time, they're going to have to give you these amounts. So when you're working on a statement of stockholder equity in practice or in your homework, they're going to have to give you, what were these balances at the very beginning? For here, this was a company that just started out. So because they were just starting out in business, their opening balances are going to be 0. They don't have anything yet. They've just started. So that's why you're seeing all zeros. But for any company that's been in business, they will have actual numbers on that first line. But this company is just starting, so it's all zeros. For right now, we only have 3 things that can impact statement of stockholder equity. If the company sells shares of stock. So if you're a company, a corporation that's starting out, you're going to need investors. You're going to need owners giving you some money to get going. And that's what this company did. So they issued shares of stock. That's going to go into the common stock heading. So you'll notice your column headings, you've got common stock and retained earnings. These are the 2 things that make up stockholder equity. So total stockholder equity, the 3rd column, is just a total column. It's just the first 2 things added up. So anyway, when we sell shares of stock, that's going to go in your common stock column. And then you want to carry the total over to the total stockholder equity column as well. And that's it for that. And then what else can impact stockholder equity is if the company makes earnings, if they have any sort of success. So I'm flipping back here to this company's income statement. Their income statement for the month of December, they had $1,200 of income. So that goes into the earnings of the company. So in the retained earnings column, we're going to keep track of all the earnings that the company has made. So we're going to put that right here in the retained earnings column. Make sure you carry it over into the total column as well. And then finally, one of the things that I have skipped over until right now, so let's go back and look at the definition of it because I've just blown that off. Another thing that you're going to see are called dividends. So if a company is successful and they're a corporation, owners are going to be expecting to get something back. So one of the ways you could give something back to your owners is by paying them some of the earnings of the company, and that is called dividends. Primarily, people think of cash dividends when the company pays cash out to the shareholders. But dividends, they're not an expense. They're their own little separate little beast. They get reported separately in an account called dividends. And we're going to show them on the statement of stockholder equity. So what the company is doing is they're taking that $1,200 of earnings and they're giving $200 of it to the owners. So we're paying that out of the earnings of the company. We're no longer retaining it. We're paying it back to the owners. So you want to show it as a negative amount. And you'll notice over here they said less dividends. So you also want to make sure when you carry it over to the total column that you show that as a negative as well. When you go to do this in your Connect homework, you either need to put a negative sign before the 200 or you have to put the 200 in parentheses to show that you are subtracting it. Okay, that for right now are the only three things that could have an impact on stockholder equity. So our final step is that we're going to calculate these ending balances. So common stock, we started out with 0. We sold 25,000. We got 25,000 from our investors. So our ending balance for common stock is $25,000. Retained earnings, we started out at 0. We made $1,200 this month in net income, but we paid $200 out to our shareholders. So how much did we retain? We've retained $1,000. And then your total column, 0 plus 25,000 plus 1,200 minus 200, you're going to get $26,000 for total stockholder equity. You could also add your column totals across. 25,000 plus 1,000 equals 26,000. So those two numbers should end up being the same. And that is a statement of stockholder equity. In class and in the practice homework, we would be going over exercise 1-7. So it's in the practice homework. If you want to try it there, we will be going over that exercise in class. Obviously, you're going to be doing a statement of stockholder equity for your homework assignment as well. So that's all on the statement of stockholder equity.